Ladies and gentlemen, good day and welcome to the Container Corporation of India Limited Q4 and FY22 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Bhumika Nair from DAM Capital. Thank you, and over to you, Bhumika.
Yeah, thank you, Tanvi. Good morning, everyone, and a warm welcome to the Container Corporation of India Q4 FY22 earnings call. We have with us today the management being represented by Mr. V. Kalyana Rama, Chairman and Managing Director. I'll now hand over the call to him for his opening remarks, post which we'll open up the floor for Q&A. Over to you, sir.
Thank you, Bhumika, and good morning to all my friends, analysts, investors. I am having with me here all my management team, Director Domestic P.K. Agarwal, Director International Marketing and Operations Sanjay Swaroop, and Director of Finance Manoj Dubey with me. And let me first of all share with you that we are happy to come out with good numbers, and we are back from the effects of the pandemic. And the last year we could see the volumes, the revenue grow very healthy. Almost all quarters, all months, we had record. We were having the best ever turnovers in all the months, in all the 4 quarters. The trend continued, and overall in the year, we achieved a very good operational income that all of you might have seen from the results, that we had a net operating income of almost 7,600 crores. And also PAT, as I given the forecast, the guidance during the last year's call, we grown by 100%. This year the PAT has come to 1,062 crores, and EBITDA almost we touched 2,000 crores. A little less 2,000 crores we got the EBITDA, and the Concall team has really worked hard. As last year we discussed, the company was never closed for even a single day during the first wave of COVID, and during the second, third wave, what happened during this financial year also, we never had any occasion to close down. All our terminals were working. Of course, there are some infrastructural constraints as a country we are facing. So your company is also facing some infrastructural constraints. We are working on various out-of-box methods to overcome these constraints, particularly for the rolling stock and the containers. We added 24 new rakes last year, and now today we are having 27 high capacity rolling stock, which can carry 80 tons carrying capacity. As I was discussing with you people, that this 80-ton carrying capacity wagons increase our chances of double stacking. And that happened. The double stacking figures we will be sharing during the conference. Definitely you people will be asking me questions about the number of double stack trains run. But overall, the double stack increased by 50%, 45% over the last year. So we started operating double hub operations. So there is one hub at the Katwas. Now the second hub at Swaroopganj become operational, and we are doing double hub operations. So now JNPT is fully on the double stack map. In addition, even domestic containers also we are now trying to bring in and do double stacking from Swaroopganj to Katwas. So these are the new out-of-the-box ideas what we are bringing in. These things will improve our margins. So this year the margin, overall margin increased. Of course, there is a slight dip in the rail freight margin because the pricing models we changed a little bit during the year. We gave a lot of discount on the empty box movement from port to hinterland. That has given us very good volumes. In fact, the volumes increased by 3 times because of that encouraged move what we have announced. So we are continuing that scheme for this whole year. But overall, this has brought in more profits to us. So that particular one idea, if I talk about, the net effect of that idea is around 80 crores plus in my bottom line, even after giving 50% discount on the movement of box into hinterland. So we started some more VDS schemes this year to encourage more imports into our terminals. So the pricing changes what we did, which has brought down a little bit of RFM, but increased the overall operating margin, is that we are making the earnings from terminals more pronounced compared to the rail freight. So that is a slight change in our pricing strategies. So the overall operating margin for the year, if I look at, has gone up to 31.1% compared to 27% last year. So FY 2021 it was 27%, FY 21-22 it is 31.1% overall operating margin. Whereas rail freight margin has come down from 30% to 28%. So the earnings we shifted into the terminal earnings, and there's the heads we changed. So that is making terminals more attractive, bringing in more value additional services, more other services, giving a complete basket of logistic service to our customers. We handled 4+ million TEUs in this year. So as I shared with you, and this year we are having an ambitious target of touching 5 million TEUs. And one highlight here is Kathuwas, the hub what we were operating, we did 6.8 lakh TEUs in the financial FY22, and this year we are keeping a target to make it a million TEU ICD. See, this will be the first time, I think, in India definitely, but maybe I have to check the records, anywhere a million TEU ICD is becoming operational. So this Kathuwas, this year, our target is to make it a million TEU ICD. Rest all, I think during the questions we will answer, and this year guidance, definitely we will be adding at least 12 to 20% into the PAT, and in top line, again 12 to 20%. That is what we are aiming at, because in domestic segment we are seeing a good growth. The asset utilization has really gone up during the Q4, and this year we expect the similar type of growth in domestic, and EXIM, of course, it is dependent on export-import volumes out of India and the box availability, but overall we could see the market is recovering very fast, and there is a lot of demand for exports, and so in tandem with that we expect 10 to 12% growth in EXIM and maybe around 25% growth in domestic this year. That is what we are aiming at, having ambitious targets, and we are sure the company is now onto the growth path, and next 3 years we are expecting very good growth for your company year after year. And after 3 years, this company will be definitely on the next pedestal, standing on a next pedestal to get into the complete logistics thing. Thank you.
Thank you.
I think let me add one more thing before we open for the questions. The bulk cement stocking off, now we started moving commercial, we started commercial operations in that. We moved commercially 1 or 2 trains, and this is going to give a very good volume. So let me give you a guidance on this. So people are asking me what is that volumes we can expect. In the next 3 years horizon, if I talk, as on date, we handle around 12 million TEU, 12 million tons as tonnage terms in domestic. In bulk cement alone, in the next 3 years, I expect your company to handle around 12 million tons. That is the potential available in bulk cement market. So it's a very good product we launched, and there is a good demand for it, and a very good product we come out with, combining that bulk cement movement with bag cement movement. So it's going to be a revolutionary growth there in this segment. So that's where we expect a robust growth in domestic volumes. Thank you. Now we can open up for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah, thank you for the opportunity. Good morning, sir. So the first question is that in response to the withdrawal of discounts by the Indian Railways, what would be the pricing action that we would have taken or proposed to undertake?
I think we already announced, Ashish, and there's the pricing. We passed on the increase in the fare to the customer.
Okay. So what would be the quantum, sir, roughly, that we have passed on?
So whatever that 25% what the railways withdrawn, the same thing we passed on.
Okay. So it should have no impact on our margins.
Absolutely not.
Sure. So second is, if you can just share the originating volumes for the quarter.
Yeah, Mr. Swaroop will give you.
Originating for Q4, for EXIM it is 534,438 TUs, and domestic it is 113,253 TUs. Total 647,691.
Sure. And just last one, sir. This quarter, if we see the employee expenses and the LLF, they seem to be a little bit on the higher side when I compare with the third quarter. So if there is any clarity, if you can provide on the same. Thank you.
Yes. So just for your clarity, for apple-to-apple comparison, we have just deducted 72 crores that we provided for last year. So if I deduct that from last year, it comes to 352 crore. And whatever provisions we made this year because of good performance of the company, the PRP provisions goes up, as well as the medical provision and other actuarial provisions. So if I do apple-to-apple comparison, 352 crore has grown to 364 crore, which is 3.5% only. So that's the clarification for everybody to note. And this 3.4%, normally it is 10% growth every year in the salary. 3.4% is only because of the fact that attrition level is little higher nowadays for company, and we are not adding any further employees, although the productivity is going up. So that's the clarification.
Sure. And secondly, on the LLF, sir, LLF bit, that also seems to have gone up when I compared with the third quarter levels.
No, LLF has not gone up. LLF, we gave a guidance of 450 crores and we did it 465 crores. This 465 has got some provision. Okay, so there was little, and the LLF, now the final papers are with government and something is going on. I can't now reveal what it is, but definitely it will be beneficial to the company. Once that is decided, these provisions will be adjusted in the current year.
Okay, so for next year, we should take 465 as a base and then grow it by 7%. Is that the...
You should give chance to other people. You are asking...
Sure. Sure. Okay, sir. Thank you.
Thank you. The next question is from the line of Akhil Milani from VT Capital. Please go ahead. Akhil Milani, your line has been...
Yes, hello. Yeah, thanks for letting me ask the question. Hello, sir. Sir, my question was relating to the container shortages that we've been hearing about for the past 1.5 years. How does that exactly affect our operations, sir? So that would be my first question. And my second question would be, I remember 2 calls ago we had discussed on the automotive side, we were planning some new sort of containers and we were planning to foray into that. So what has been the progress there, sir? Thank you.
Your first question, this container shortage is in the EXIM segment, and that is liner containers we operate. So the liners, they were doing lot of repositioning into India because Indian exports have gone up and imports have little come down. As a country, normally we were import surplus, but suddenly we became import deficient and export surplus. So that has put us in this situation where there is a container shortage. That is why Concall, we gave that scheme of 50% freight rebate to encourage shipping lines to bring in more containers into hinterland from ports. And that has given a very good result. As I mentioned in the opening remarks, the volumes have gone up by 3 times. Looking at this, we expect shipping lines to bring in more containers into India, and they are doing it. We could see in this year the trend is continuing, the repositioning is going on. So that, if the shipping lines have to bring in, see, sometimes these operational problems at the China ports are affecting India. Once that, we hope that COVID effect will go away. Now, recent news is that Shanghai has also become almost COVID-free. Once these ports open up and China come back to normal, then again the container shortage should not be a problem in India. Regarding your second question, I don't think we never planned for any automotive containers. I don't know where from you heard. I never mentioned this in my con calls.
Okay, sir. Thank you, sir.
Thank you. The next question is from the line of Deepika Mundra from JP Morgan. Please go ahead.
Thank you, sir, for taking my question and congrats on a good year. So just 2 from my side. Firstly, on the volume growth, you mentioned 5 million ton as an outlook. That's about 20% growth. Could you split that into EXIM and domestic in terms of guidance? And secondly, on the rail haulage cost, in general with energy prices going up, any risk to increase in rail haulage costs?
Deepika, I already mentioned about the rail haulage. Whatever the railways has announced, the withdrawal of the rebate of 25% on empty running and 5% on loaded running, we just passed on the actual increase in the haulage to the customers. Okay. So there is no effect of that increase on our margins. And having done this railway, now let us see what railway is also very aggressive in their pricing nowadays. So I can't speculate on what railways is going to do. But we will not be taking any hit on the price increase by any rail haulage increase. That definitely we are working on. That you could see from the present increase what we passed on to the customer. Coming back to volume, the present year we did 3.27 million in EXIM and around 8 million in domestic. So overall volumes we did is 4.07 million. So in domestic we are expecting 25% growth. So that will take us to roughly 1 million TU in domestic, and maybe around another, we'll add 0.5 to 0.8 million in EXIM. So overall target we kept 5 million. So 1 to 1.2 million in domestic and 4.8 to maybe 6, something like that into the EXIM.
Got it, sir. Okay. Thank you so much. That's all from me.
Thank you. The next question is from the line of Mr. Achal Lohade from JM Financial. Please go ahead.
Yeah. Good morning, sir. Thank you for the opportunity. Can you help us with the market share at the ports, at the key ports, please, for FY22 and FY21, if possible?
That is rail coefficient at JNPT is 20.8, out of which Concall, if we deduct the short distance movement, our market share is 76.4%. At Mundra it is 46%, and Pipavav it is 52%.
And would you be able to help us with FY21 as well, sir, in the similar fashion?
21 in JNPT it was same, 76.4. Mundra it was 43.5, so it has increased. Pipavav it was 49.8.
Got it. The second question I had, if you could help us with the empties cost for EXIM and domestic for FY22 and 21, sir.
Empty cost is for EXIM it is 86.92 crores and domestic 207.23 crores.
Okay. And just one more question, sir. You have highlighted that the scheme what you rolled out for the shipping lines to get the containers into the hinterland drove the volumes 3x. Can you help us in terms of the mix of these empty containers in our total volumes for EXIM? Would that be?
Right now, I can't give you here. Those numbers we don't maintain because all the EXIM containers which are come into our system will go as export loaded.
Understood. Thank you. I'll come back in the queue, sir. Thank you.
Yeah.
Thank you. The next question is from the line of Atul Tiwari from Citigroup. Please go ahead.
Yes, sir. Thanks a lot. Sir, you briefly mentioned about double stacking to JNPT. So could you elaborate more on it? Has it started and what is the status of final connection of DFC to JNPT as of now?
No, I'm not talking of JNPT connection. I'm talking of JNPT bringing onto the double stack map. That is what we are doing through Swarupganj hub. Swarupganj is near Palanpur and DFC. So we are bringing JNPT containers into Swarupganj and we are doing hubbing at Swarupganj and the double stacking up to Kathuwas.
Okay. And sir, any color on when is this final connection likely? What are the current timelines? Do you have any color on that?
I can't guess it, and I hope you have to do a Concall with DFCCI.
Okay, and sir, I mean, just the last one from my side. Any update on strategic divestment? Anything that you have to share?
Strategic divestment is on the cards, and things are moving on, and let us wait for the government decision. See, the decision is of the government. The decision is out that the company will be divested. I think there is no change in that decision. Now, when and what timelines, we will be, I think, hearing very soon. Let's wait for that.
Yeah. So obviously, last week we saw that government has kind of decided not to go ahead with BPCL. So does it change the situation for Concall also?
I think I already told in clear terms here. Now, why you want to ask me? You are becoming journalist or analyst?
Because sir, it is quite vital for the company and stock. So we need to get some updates.
You are analyst, and I already said that the divestment is on the cards.
Okay, sir. Okay. Thank you. Thanks a lot.
Thank you. The next question is from the line of Krupa Shankar from Spark Capital. Please go ahead.
Sir, good morning and thank you for the opportunity. A couple of questions from my side. The first on the cement demand which you are forecasting over the next 3 years. Given that the average lead distance of the end market is roughly about 600-700 kilometers for cement sector, and overall right now the domestic leads are at up close to about 1200 plus kilometers. So one can expect that this lead will come off and in turn the realization would come off. Is that a fair assumption, sir, going ahead?
That is not a correct assumption. See, it all depends on the margins when we calculate. The asset utilization also has to be seen. When my domestic lead is around 1400 kilometers if I am operating, so my asset will take more time to have a turnaround. So I will be doing one cycle maybe in 30 days. But whereas if the lead will come down to 600 kilometers, I will be doing my cycle maybe in 10-12 days.
Good.
So ultimately per container per year, what margin I will be earning, that will be in tandem with what we are doing right now. So that is how we price and we work on. That is how we operational optimization we bring in the system.
Right. And then if given that the extent of rolling stock required to meet this incremental demand will be fairly substantial. So what is the quantum of rake addition you are expecting over the next 3 years to meet this demand?
So there are certain infrastructural constraints. Last year we added 24 and as of now the approved program which I shared, I think, maybe a year back, or I think maybe my 1920 call, that we made a program to add 270 rakes in 4 years' time. Out of that, 24 got added. So still, there are 246 rakes which we planned, and the procurement action is on at various stages. So that is regarding the rakes. And containers we are working on, and company is planning to add anywhere between 50,000 to a lakh containers in the next 3-4 years. We are working on various methods on that.
Got it. And so, if regarding the terminals, also, if you can highlight on any terminal additions you are likely to add, what you added in
last
FY.
year, I think we added 2 terminals.
Right.
And last FY added 2 terminals because of a lot of work slowed down because of pandemic and COVID effects. And this year we are expecting to add around 5 to 6 terminals, and we are planning I think another 4 or 5 new terminals.
Good. And last from my side, if I may, the volume mix from respective ports, JNPT, Mundra, and also the lead distance and double stacking.
This is the third question, not very important. I will put you back into the group.
All right, sir. Thank you.
Thank you. The next question is from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Good morning, everyone, and thanks for the opportunity. I had 2 questions from my side. The first question was on the land license fee. So you had indicated that Concall's plan for going for a long-term arrangement, giving a one-time payment to railways. Is that plan still on, or does it depend on the land license fee and the revised amount of it?
Yeah, it is very much on. See, now we are waiting for, there are certain now decisions to come from the government, and as I mentioned in the beginning, there are very positive moves going on, and very soon we will hear. So once it comes out, then there is long-term lease. We will be doing it. It all depends on, that now the land license fee, what percentage we have to pay on year and long term. So we will be doing calculation. I think long term is any day it is better. So we will be, though that is still on the cards, we are waiting for the final decision on the land license. But let me hear, to avoid further questions from all the people, I think I hope everyone is listening to this. There is a clear clarity on land license fee. As we mentioned last year, I gave a guidance of 450 crores. We made payment less than that, but we provided some amount and made 465 crores in this balance sheet. That is as a part of good governance, not to give any uncertainty into the balance sheet in future in case of any divestment or any other thing, anything. There was no speculation on the balance sheet. So otherwise, so there is a clear clarity, and there will be definitely something we are going to hear from the government that may be beneficial to the company.
Noted, and thanks for your response. The second question is related to DFC. What I wanted to ask you was, what steps need to happen on the ground so that the benefits of DFC start becoming more meaningful for you, and probably some timelines for the same?
But already DFC benefits we are seeing. See, the number of double stack trains has gone up by 45% in the FY21-22 compared to FY20-21. So this is, and more traffic is coming onto rail. There is a shift happening from road to rail. And also I mentioned about the high capacity wagons, which we introduced. 27 rakes are running, which can carry 80 tons. So that is giving more opportunity of double stack. So further DFC advantage will come once Dadri gets connected and JNPT gets connected. Once Dadri gets connected, the advantage will increase, and once JNPT connected, it will further go up. Thank you.
Thank you, sir. Those are my questions.
Thank you. The next question is from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
I congratulate Mr. Kalyan Raman on good set of numbers. Sir, I have only one question. I joined little later. If you have replied, then I'll go through our Concall transcript. See, what is our strategy for the domestic logistics business which we had planned, and we are seeing some good traction. So how do we see in near 3-year term perspective domestic business? If you can give some color on strategic thing as well as the growth opportunity.
जी भरत जी ऐसा है, see domestic में as I said the volume growth is we are expecting very good growth because of the bulk cement what we started. As I mentioned, we are expecting 12 million tons of traffic in that alone. This year we handled 12 million tons entire domestic. So there will be organic growth in the existing market plus a new product of domestic bulk cement is going to add. So there after 3 years where I am seeing domestic volumes is plus 25 million tons. That's a good number. Okay, see this year we did total 48 million ton out of which 12 million ton is domestic. I am seeing after 3 years 25 million tons. That is one thing. So in domestic again now in domestic and EXIM we added FMLM, that first mile, last mile, and there is a good growth in that activity. So connecting the end-to-end solution. So we are expecting that also will further increase. Our aim is to cater to 50% of the market through our FMLM. I think we are working towards that. We are trying to bring in some new things into the FMLM segment. We are working with some OEM equipment people, something like LNG transportation. So these are new ideas we are working on, and Concall is definitely at a place, at a stage where we can bring in new things into the market, which will be beneficial for the company as well as to the customer. The other thing which maybe you are trying to understand is the distribution logistics business. So there was some effect on that is because of the COVID. Recently I think we floated a tender for 2 locations and there was some response to that. So we are working on that. So I think it will also come through because that now the COVID effect has gone out and the market is now picking up. I think there is good interest for the warehousing and the supply chain management business, 3PL logistics in the market.
So, sir, I mean on cement side, can you give some geographic, which are the geography and how this DFC will play out for us in domestic also?
Domestic mein DFC, see, cement business mein DFC may not play much role, but what we are trying to do is the traffic which is moving from west to east, we are trying to bring it onto DFC to do some double stacking between the hubs. See, the Swaropganj and Kadwas hub, even domestic containers we can do double stacking because they are double hub operation mein, and we got that higher capacity wagons of 80 ton that will give us the chance to bring in domestic containers into double stacking. That is we are working on. So that is only the effect of DFC on this domestic business. Whereas cement market, this bulk cement market is available all over India. It is not any specific regional wise. There are cement factories in west, south, east. I think north there not much. North we will be bringing in cement from other places.
And how do we see the profitability with volume growing up and
profitability, as I said, no, the margins will be in tandem with what we are getting now in domestic as well as EXIM. Because we don't go for a kill in the margins. We want to steadily grow the market and increase the volume, market share, and that will definitely increase our profits.
So is it fair understanding, the last question, is it fair understanding that in next 3 years domestic will grow at faster pace than the EXIM?
That is what I am telling Bharatji.
Okay. Thank you and all the best, sir.
Thank you.
Thank you. The next question is from the line of Srinidhi Karlekar from HSBC Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, would it be possible to share rail coefficient numbers for Mundra? And in your assessment, sir, what this number...
Out on that. We already given an earlier question.
I think that was Concall's market share in Mundra, I think, sir.
No, Mundra, my rail coefficient also was told that time.
Okay.
Yeah, rail coefficient is what? How much is it? Rail coefficient? 27.47 is Mundra rail coefficient this year compared to 24.85 last year. And
Okay.
Pipavav it is 68 compared to 63 last year.
Yeah. And so more importantly, sir, in your assessment, sir, if we go into 4 to 5 years in future, what this number could be for Mundra particularly? Is there a substantial scope for this number of rail coefficient can go to closer to 45 levels numbers, depending based on the cargo?
In Mundra, with the DFC, if it gets connected up to Dadri, this may go up to 35%.
35. Okay. And the last one from my end is that there's this Gati Shakti scheme of Indian Railways where they plan to develop 500 multimodal terminal. Is there opportunity here for Concall, or it's more of a non-containerized cargo that Indian Railway does for themselves?
The Concall has got its own terminal all over India, and we are self-sufficient, and we are showing the growth. So if there are opportunities available in Gati Shakti, we will definitely try to utilize them also.
Okay, sir. Thank you for answering my question, and all the very best.
Thank you. The next question is from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah, thank you. So just one question. What would be the capex plans for FY23? And if you also can give some medium-term perspective, let's say over the next 3 to 5 years, what is the kind of capex that we should expect? Thanks.
By this year, capex, we have given a target of 620 crores, but our capex infusion requirements are very high. So there are certain constraints because of government policies like China water policy and all. So we are working on various models. Once they come through, our capex infusions will be very high. So next 3 years, if I look at capex infusion, the capex infusion in next 3 to 4 years will be around 8,000 crores. 8,000 to 10,000 crores.
Okay. So could you broadly highlight if you could split this 8,000 into 2-3 main buckets where we would be spending?
We will be spending on infrastructure, rolling stock, containers and equipment.
Okay, sir. Thank you. Thank you.
Thank you. The next question is from the line of Sumit Kishore from Axis Capital. Please go ahead.
Good afternoon. Thanks for the opportunity. Sir, in your opening remarks, you mentioned that in the next 3 years, you see the company would be standing on the next pedestal, and you also mentioned that you'll have a more, well-rounded offering in logistics. So could you please elaborate, and maybe, chart out the 3-year strategy plan for us?
See, I already mentioned many things what we are going to do in the next 3 years. So 3 years, I talked about domestic business achieving volume of 25 million ton in weight wise, and the volumes handling this year itself we are targeting 5 million TEUs. So that will further go up. We are trying to make Kathuwas a million TEU ICD, which is first anywhere, not in India, maybe in Asia. I have to check up the statistics elsewhere. And DFC getting completed and getting connected to Dadri and getting connected to JNPT. And we are inducting more rolling stock of higher capacity, getting into logistics business. We are already doing FMLM, connecting and we are now also giving business solutions, which is a complete solution to a customer, right from picking the cargo at the doorstep and putting container onto the ship, or delivering the cargo at the other end in India. So these things are already started. We are working on, we are doing them, but they are in now low scale. They will definitely, we will be scaling up these things, and we are getting into 3PL business, the domestic distribution logistics. We floated the tender for 2 locations, and our idea of making 20 hubs is still on, and there is a lot of interest in the market. So all these things are going to happen next 3 years, 3 to 4 years. So I kept a target of 3 years for the company. So after 3 years, when we add all of this definitely is keeping the company into the next pedestal.
Thank you and wish you all the best.
Thank you.
Thank you. The next question is from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Thanks for the opportunity. The question, sir, that I wanted to ask you was related to the haulage rates. Now, Indian Railways may be considering taking a hike given the way and diesel prices have moved up. And in the past, such hikes have been arbitrary and quite high. Is there any confidence that you're getting from the railways that things would be different this time around?
Already Indian Railways has announced the hike, no, which is effective from when? 1st of June? 1st May. 1st May it was affected. So the hike, they already announced 25% empty running they have withdrawn and 5% domestic discount they have withdrawn. So that is already announced. More than that, I can't speculate on what Railways is going to do.
Noted, sir. That was the only question from my side. Thank you.
Thank you. The next question is from the line of Krupa Shankar from Spark Capital. Please go ahead.
Thank you for the opportunity again, sir. Just wanted to confirm one thing. So, you mentioned that the capex for the next 3-4 years would be about 8,000 to 10,000 crores.
Yeah, that is what the capital infusion required in this company.
Right. So this is excluding the long-term lease which will be paid towards the Indian Railways facility. So we would take in additional debt for this capex. Is that the thought process?
For the capex requirement for the next 3-4 years, if I spend 8 to 10,000 crores, I think mostly it is from internal generation.
All right. So this includes the Indian Railways LLF at lease advance, which can be likely paid for the longer term?
No, this is other than lease. This capex I am talking of is not of a lease. Lease is something, that if I pay lease, long-term lease, then there will be no LLF payment for next 35 years.
Understood. Understood. Okay. And second question from my side on the bookkeeping question with respect to the volume mix of Concall from respective ports and lead distance and double stacking.
You ask everything in one go. You ask specific, what do you want?
Okay. Then I would request for volume mix from ports, sir, please.
JNPT 32.3%, Mundra 40%, Pipavav 10%, Vizag 6%, Chennai 5.7%, and Calcutta 1.3%.
Thank you, sir. I'll get back in the queue.
Thank you. The next question is from the line of Jonas Bhutta from Aditya Birla Mutual Fund. Please go ahead.
Yeah, hi, sir. I'm just circling back to the capex numbers because the last 5-year average run rates have been more in the 800 to 1,000 crore band, where now it seems that that's sort of getting bumped up. Given that we have a cash balance of roughly 3,000 crores and we generate about 1,400, 1,500 crores each year, and provided that if you pay this one-time LLF payment, then wouldn't that warrant a debt take on for the capex? And also, when you elaborated
I think I answered this question. If I look at my capex infusion of 8,000 crores over the next 4 years, 3 to 4 years, I may not require any debt. So if LLF thing comes out, yes, there will be debt requirement. Let it come out. So why we should do a lot of speculation? See, that is your job, isn't it? As an analyst, you do your permutations, combinations, and do a lot of iterations. I don't do that iterations. My thing is capex infusion, I need around 8 to 10,000 crores, which I am planning. Maybe that doesn't require me any debt. I can do it through internal resource generation. So in addition, if land license fee will come out and I decide that I have to pay 35 years long-term beneficial rather than paying every year after the government decision, that definitely I will maybe go for debt because that will avoid me paying the LLF for the next 35 years for this company. So that again saves money from LLF, which I am paying today. This year I paid 465 crores. So these are all various calculations, the iterations, isn't it? So my answer to the question was for the capex of the infrastructure, rolling stock, containers, and equipment is around 8,000, 10,000 crores.
And out of this, rolling stock and containers put together would be how much, sir, roughly?
I don't give that.
Did you said is that 245? You need 245 more rakes and about 50,000 to 1 lakh kind of containers. How much would that be, sir? Roughly 50% of that amount.
Numbers, you do the calculations. Why you want everything to be done by CMD of the company? Each rake costs around 14-15 crores. Each container is costing roughly around 3.5 to 4 lakhs now. Now you can do your calculations.
Sure, sir. Thank you. And that's all from me. And all the best.
Thank you. The next question is from the line of Pulkit Patni from Goldman Sachs. Please go ahead.
Sir, thank you for taking my question. Just one question, sir. I mean, in one of the earlier questions, you said that it looks like almost a certainty very soon we'll be hearing about divestment. On the other side, we are increasing our capex so significantly. I mean, there is clearly a mismatch, because why would the existing owner want to incur so much capex when the new owner will take the direction of this company wherever they feel rightly so? So if you could just help us reconcile, one, the owner is changing, and second, such a significant capex is right now being planned. How does that work?
Hey, Pulkit, this is your perception. Okay? Now listen to my perception. So whoever may be the owner of the logistics business, logistics is a particular way of doing business. So the logistics cannot be done in a different way. There is something completely a 180-degree opposite method of doing logistics. Whoever is going to buy Concall, or Concall will be PSU, I do not know at this moment. So Concall will be doing the operations in the same method, because these are the best proven methods, and we are able to produce a healthy balance sheet quarter after quarter, year after year for last almost maybe 10 years now. So Concall is always profitable. So do you think there is other exactly 180 degrees opposite method of doing logistics business? Definitely not. So whatever may be the decision, these will be holding good, and everybody will be looking at these plans.
No, sir. So my question was that a new owner may already have certain assets, may already have presence at certain locations.
Let us not get into these speculations. This is too much of speculation you are trying to,
No, sir. I'm not trying to speculate. I'm just trying to understand from a thought process perspective.
What I'm telling you now, by anybody is going to do logistics of Concall. If it is a PSU, it will be run by me for some time. After me, some other will come as CMD of this, will run. So when we are talking of the future of this company will be definitely taking these steps to increase and get on to the next pedestal and becoming a complete logistic solution provider.
Sure, sir. That's useful. Thank you so much.
Thank you. The next question is from the line of Mr. Achal Lohade from JM Financial. Please go ahead.
Thank you for the follow-up opportunity, sir. Can you help us with the lead distance for the fourth quarter and FY22? And
quarter-wise, we are not having lead distance right now. For the yearly lead distance, in EXIM, it is lead distance is 692 kilometers, domestic is 1390 kilometers, and combined is 785 kilometers.
And how would that be, sir, for FY21, if you could also give a comparable?
FY21 EXIM, it is almost same, 697, domestic it was 1378, and total 778.
Understood. And the double stack numbers, sir, please.
Double stack is a growth of 50%, 45%, and I will give you the yearly number. This FY in 21-22 we did 3757 double stack trains compared to 2574 last year.
Got it. Thank you so much, sir.
Yeah.
Thank you. The next question is from the line of Atul Tiwari from Citigroup. Please go ahead.
Sir, my question has been answered. Thanks a lot.
Thank you. The next question is from the line of Krupa Shankar from Spark Capital. Please go ahead. Krupa Shankar, your line has been unmuted. Please go ahead with your question.
I think they must have completed their question. Now they are getting repeat of the same people.
We have a question from Girish Achipalia from Morgan Stanley. Please go ahead.
Sir, thanks for the opportunity. I just had one question on the long term. You've given a CapEx outlook for 4 years. Is it possible to provide some direction on the revenue asset turns in the fourth or the fifth or the sixth year, and some divisional split in terms of CTO operations and MMLPs that you look at and other logistic initiatives that you're looking at, some revenue split at that level and some asset turn guidance?
For forecasting, is too much of, dissection is not good, Girish. So definitely the forecast, when I give you this, we are looking at making these volumes to 5 million this year we are targeting. So after 4 years, we will be targeting something like, 6.5 to 7 million. So you can understand what will be the revenues. The revenue, the operational revenue, we are definitely looking at doubling it up in the next 3 to 4 years. That is what we are aiming at. The rest of the things will be, as I said, margins will be in tandem with what we are doing now. I don't expect the margins to really grow up because we are operating at a very high and EBITDA operating margin of 31.1% is a quite high margin in the logistics.
So any direction on the revenue for the new logistics initiatives that you would be looking at in terms of how much could that contribute in the percentage of revenue? Would it be like 20% of your revenue?
I'm not doing those forecasts right now because these are the new initiatives we have to roll out and work on. So definitely they'll contribute, let's say like this, okay. So overall, there will be good contribution by these things. I gave you where I can give you a definitive figure like bulk cement transportation, we will be looking at 12 million tons transportation.
Sure, sir. Thank you.
Thank you. The next question is from the line of Koundinya N from JP Morgan. Please go ahead.
Sir, couple of questions on the domestic business. So firstly, on the margin front, I see that 4Q, the margins are little off. I can understand there can be quarterly volatility. Just trying to understand if there is any one-off thing or what could be the run rate that we should look at from a domestic margin perspective.
See, P.K. Agrawal, Director Domestic. See, we will be keeping up in tandem with this earlier margin, and if you see my percentage of operating margin for the domestic is almost around 20 to 22%. So we'll be continuing with that. So quarterly there will be some adjustment of certain expenditure which you can see there is up and down, but you have to see the overall what is there in annual margin, which you can see that there is some coherence with that.
Understood, sir. And the second question, sir, on the domestic front, you did speak about cement. I was also trying to understand, where do we stand with respect to fertilizers and also food grains. We are also trying to contain this bulk cargo movement. So just trying to understand where we are currently on those.
Food grain already we are into it, and we also have made already a trial run of the bulk food grain movement, and that is continuing. As far as fertilizer is concerned, there is no movement in the container because the mostly fertilizers are being run on the basis of that I will say concession or discount they get from the Ministry of Fertilizer. Whereas for the containerized movement, there is no such concession is available. That is why the fertilizer movement does not take place in the containerized movement.
Understood, sir. So lastly, if I may ask one more question. So on the capex front, you did speak about infrastructure. So just trying to understand the container terminal expansion that we are planning. Do we already have land, etc. on this front, or should we also invest towards land and therefore high capex here?
See, already it's been mentioned by CMD that this year already land which has been procured will be commissioning around 4 to 5 terminals, and also another 4 to 5 terminals we are planning in this year, which land procurement will be going on in the current year. So that is the plan. We go year-on-year basis and we go for the land procurement for the new container terminals.
Got it, sir. Thank you.
Thank you. The next question is from the line of Rohit Ori from Progressive Shares. Please go ahead.
Hi, sir. Two questions. The first one is related to the Concall acting as a custodian where you are trying to keep containers as warehouses. Can you take us through the rationale, the risk and opportunity in this initiative?
See, as far as container as a warehouse, we have floated the scheme for the domestic container, where basically it is a part of the end-to-end logistic solution, and people will not require to evacuate the cargo from the container, and they will be at the liberty to evacuate the cargo as per their requirement, and they can keep the cargo in the domestic container. That is already the scheme is on. And that in going future, that will be much more. We'll be providing that service so that our overall logistic cost goes down and become more competitive.
So can you share currently how many terminals are capable of doing this service at what price?
All the terminals are there, and pricing is same. We will give you the universal pricing for across the terminal.
Okay. Okay, sir. That's it from my end. Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to management for closing comments.
Okay, thank you. Thank you for giving us the opportunity to share our plans for the future, for the current year, and how the company will be with all of you. I hope we will be able to come to the expectation of all my customers and investors, and customer value creation is always the motto of Concall. And with a lot of digitization initiatives what we have taken, and in fact this year we will be coming out with a visual-based artificial intelligence model for giving more information, online information to customer, real-time information about the activities of their cargo happening over terminals. So with all these initiatives, I'm very sure that Concall will be playing a very significant role, leading role in Indian logistics sector. Thank you.
Thank you very much. Thank you very much. On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.